Well, Graham Samuel's APRA capability review called out the fact that super has been overlooked by APRA. It wants to see a new super division focused on performance.
Well, this week, two large industry super funds, First State Super and VicSuper, are well on the way to a $120 billion funds under management merger. So, how will it go in the new era? Well, I sat down with the two current CEOs, Deanne Stewart at First State Super and Michael Dundon at VicSuper, and asked them first why a merger seemed a good idea.
Certainly the industry's under a lot of competitive pressure to deliver returns and good fees for members, so having scale supports that and helps you deliver that. So yes, I think in the case of VicSuper we're very interested in pursuing mergers. We've been discussing them for a number of years, and this particular opportunity is a really strong opportunity for the fund.
Yes, Deanne, economies of scale on both the back office side but also presumably in terms of the big assets, the investments you could go for.
Correct. I think scale gives you a number of things. Certainly administration benefits, but on the investment side it gives you both the opportunity to really drive the price down on behalf of your members, but also access a lot more opportunities.
So you're really up there now with the big kahuna, Aussie Super. You're competing with them for opportunities.
Well, certainly there's a number of really large funds, but Aussie Super is certainly right up there. First State Super's up there. I think the combination of VicSuper and First State Super will be about $120 billion. So it'll certainly be large in scale. And the whole reason, as I said, is to then help drive down fees for our members and provide better investment outcomes.
Michael, the Productivity Commission actually called out the non-performance of some of the smaller funds in particular and the need for mergers. But they said that one of the problems they had was that mergers weren't happening because of the egos involved. You seem to have been able to get around this. You've got one CEO.
Yeah, that's right. So I think from our perspective, we were very focused on the principles of why this merger would make sense and what is in the members' best interests. And so the board and the leadership team have been very focused on applying those principles and making sure that when we discussed the merger, we could actually see a real benefit for our members.
And you, Deanne, are stepping forward as the CEO.
Excited, yeah. I would support what Michael just said then. I don't think there's we were the first two funds this year at the Chant West Awards to have won the Integrity Award, and I think to actually make a merger like this happen, it's not like VicSuper needed to merge and it's not like we needed to merge. I think at the end of the day though we saw such benefit for members, and truly having the right integrity, the right best interest for your members in mind is what it takes to make this to happen.
Have you got a new name, a merged name? Is that going to happen?
No, not at this stage. I think we're still working through that, but certainly I think this day one model will be to retain the two brands, because VicSuper's got a very strong reputation and position in the Victorian market, and First State obviously in New South Wales. So over time we'll work out what's the appropriate branding strategy.
Now, Deanne, you've been very strong on the fact that your members, a lot of them are in now the retirement phase or the pension phase, in need of financial advice, and you're looking to bring a lot of financial advice in-house.
That's really true, and it was one of the really key reasons beyond the benefits of scale is essentially, if you look at our two funds, we've both got, our average age is about 46 in both of the funds. We've both got 2/3 that are females, and so we tend to have that older age base that actually getting ready for retirement and into retirement is so critical. So when you bring the two funds together, we've actually got the largest amount sitting in retirement.
But this is really interesting because apart from the fact that there might be independent financial advisors now getting more and more worried out there, is there a potential for conflicts of interest to emerge in the same way that they've done in the banks?
Well, ultimately, the reason that both of us believe so much in the value of advice is because there is so much value to be given in that advice, particularly as you're heading into retirement and in retirement. How do you stretch those dollars out? How do you spend money differently? How do you actually get yourself prepared for tough issues like aged care and getting ready for aged care facility, which we see in some of our member base? So the reason we believe in it so passionately is that it just adds so much more value. So it's a service to our members, it's not a distribution arm, and that is the fundamental difference between, say, ourselves and banks that may have got into these sort of conflict of interest situations.
You do think, though, that there's a need for clarity around the sole purpose test, because you're now getting into all sorts of different services, aren't you?
Well, I think the reason why we say it's good to get greater clarity in the objective of superannuation and the sole purpose test is, A, it was written back in 1992, where superannuation was much more the beginning phase and really an accumulation phase. Fast forward all these years now, and we've actually got so many more of our members in retirement. It doesn't really speak to what is and isn't expected in retirement. And we both know that actually to do well in retirement isn't just about the product you're in, but actually about how you actually plan for that and the services that can really add value and actually make a complete difference to how you actually stretch your dollars out.
Michael, how do you see this moving? Because, of course, we've had the APRA capability review now, and the Royal Commission, which really has said that APRA was light on super. The recommendations are that there is now a separate super division. How's this going to go down?
Well, I think everyone in the industry wants a strong, empowered and well-resourced regulator. I think that's for the benefit of everybody, and all, particularly members. So I think there is an opportunity for APRA and the regulatory environment to be strengthened a little bit more, and hopefully they will produce even better outcomes for members.
Now, David Murray has been very critical of the idea that APRA should also be responsible for performance output, the level of returns. What do you think?
I think that's a bit dangerous, really, because...
So you agree with him?
No, well, I don't believe that that putting performance in the hands of, say, the government or a regulator is the best outcome. It really should be the market driving that. So I think competitiveness across the industry should drive good performance for members.
So you don't like that recommendation, Deanne?
Well, I think not putting words in Michael's mouth, I don't think it is that the regulator is driving and responsible for performance, but you do want an empowered regulator that actually really does have the authority to close down underperforming funds. It is in no one's interest, and that came out through the Productivity Commission. About 25% of the funds are underperforming and not providing their members with the right outcome.
But it's about the level of prescription by APRA.
Correct. It's the level of prescription, and I think you do want a regulator that is very members outcome focused, and that is certainly where they're heading, and you want them to have the authority to be able to do something about that.
And what about this idea of APRA vetoing the appointment of executives and board directors? How do you think that's going to go down?
I think both funds would recognise that really to have the best governance model, you really need to have a strong, capable board and leadership team. And I think we're both focused on how we can achieve that. And I don't necessarily think that allowing a regulator to choose individual people will be the best outcome for delivering that.
Are you going to be happy, though, Michael, going along to Canberra once a year to front MPs? The government seems to want to extend this idea beyond the banks.
Well, I think the thing about running a member services type function like VicSuper or First Aid is we are accountable. We're accountable to our members, so we need to be very transparent. So if that means we need to go to Canberra and demonstrate our performance and the services we offer, then we will.